Hey everyone, this is June from Turning Point Life Investment, and this is your market analysis for May 8, 2010. Okay, let's start with the daily view of SPY. Now, we all knew what happened on Thursday, so no surprise there. But the main thing is, what do we do now? What do we do in light of this massive sell-off? The thing that I always stress is just to follow the charts. The charts never lie. I mentioned last week to really pay attention to this head and shoulders, or at least at that time it was a potential head and shoulders that was forming. The main thing to always look at is a break of support or the break of that neckline. And once that neckline broke, you know that this is a different market. You know that it's no longer higher highs and higher lows. Now we actually have lower lows and lower highs. So that tells you that the trend has changed. And when the trend changes, so should your strategy. Now, granted, no one saw this day coming, but the fact that support was broken tells you that you should be definitely a lot more cautious going long, if at all. Usually, when a market has a huge day like this, it's going to take several days to kind of work out the kinks, to kind of let the dust settle. You see how far we are from the moving averages? Okay, the market's kind of stretched out to the downside. Now, I'm not saying it can't go lower because it absolutely can go lower, but I'm favoring more of some kind of a snapback, kind of retest the resistance area. Now, the level that I'm looking at is right around the 115 because that's an obvious level to kind of for this market to bounce back. Not to mention that if I were to just kind of take a step back and put on some channels on this market, you can see how it's fitting. It fitted very nicely within a channel throughout this entire rally, and then we broke underneath it. And you see how right around here, if we do get some kind of snapback, usually we get a retest of the bottom of this channel. And that more or less coincides with the 115 level. And that's why I say if we do, if we do get some kind of relief rally, this will be a great opportunity to look for a potential entry into reshorting this market. The only reason why I say that is because now we have lower lows and lower highs. So rather than continuing to buy on the dips, you should start thinking about selling on the rallies. Now, going into the VIX, I know the VIX shot up like almost double in just a matter of 2 days. That usually tells me that volatility is pretty damn high, and not to mention that option premium is very hefty. So this is where being an option seller has its advantages because you're selling inflated options. So rather than buying options, you can definitely buy SPY puts, for example. Or on the other hand, you can sell some SPY bear call spreads or any bear call spreads for that matter because you're getting more premium as a result from selling those options. So either way, it's all about recognizing what opportunity the market presents itself, especially if you're option trading.